Good afternoon, everybody, and welcome to the post-Super Bowl, Tuesday, February 9th edition of Bull Sessions. My name is Mark Robertson. I am joined here by Ken Kavula. Say hello, Ken.
Hello, Ken, and all the rest of you. Glad to be here.
All right. And
Beautiful day outside. We have sunshine, and it's just one of those days like you want to walk out because it looks like it should be 70, and it's really about 11. So
yeah, it's a good day for the sun porch at our house because it actually does warm up into the 60s or 70s, amazingly on days like this. And speaking of sun porches, Kim is with us. Good afternoon, Kim.
Good afternoon, guys, and it's a real feel of 88 here in Fort Lauderdale.
Ouch. That's almost hot.
Darn the bad luck.
All right. Well, everybody, we might as well go ahead and get underway. It was quite the Super Bowl. I'm not going to ask for a show of hands, but a few of you in the audience, at least statistically, may have missed work yesterday or spent the day with the flu on Monday. Ken, did you have the flu on Monday?
no, I don't. I don't get Super Bowl flu. I'm sorry. I didn't even know who won the game until halfway through yesterday. So.
Oh, and you call yourself an American?
Come on, Mark.
Kim is right down there in Florida. Everybody in Florida knows who won.
Yeah, we watched the game, and I was rooting for that Florida team, I will admit.
Well, I was just because of the Super Bowl indicator, and we'll talk about that in a few minutes. But we're going to cover some Groundhog stuff and start delving into some of the more innovative, is probably the word, selections for this year's Groundhog contest. And we'll have that dashboard up and running here shortly. Kurt was working on it earlier, a few minutes ago, so it'll probably be out within the next day or so. And that gives you an opportunity to look at other people's adventures and try to learn from them. First of all, let's start with our legal boilerplate. No investment recommendation is intended. We are going to be talking about real companies in real time, and you have to always do your homework, make your own decisions, and they should be based on your own suitability and time horizons and all that other legal stuff that you guys all know. Everything we do here is for the illustration and demonstration of the methods of the modern investment club movement, whether as promulgated by the National Association of Investors, also known as Better Investing or Manifest Investing. It's basically a process, a technique, a method, a philosophy that's over 8 decades in the making, and frankly, we watch it work all the time. We're kind of flabbergasted and probably quieter than we should be about how well it works, and one of the things we'll be talking about here in a few minutes, just keeping your head down, buying excellent companies when they're on sale. It's just a wonderful way to approach the realm of investing, especially when it gets a little bit dicey or challenging. If we do own securities that we talk about today, we will attempt to remember to tell you that we actually hold those in our portfolios, or we know people who do. We do a monthly webcast known as the Roundtable. It's got a 11.5-year powerful track record. If you'd like to be added to the reminder list on that, you can send an email to nkavula1@comcast.net. Those are always on the final Tuesday of each calendar month, 8:30 Eastern Time. They are free. You are welcome to invite anybody you think that would benefit from the sharing of ideas in the mode that we do around here. If you have follow-up questions or want a copy of the slides, Mark R. at manifestinvesting.com will get to me. All right, Ken, so we're going to wrap up our Groundhog Challenge discussions here today, again with a nod towards the champions from this year and a look to going forward, some of the companies that have been selected, and we'll be rounding that out probably over the next few days, and just take a look at a few things like that. A few things shifting around. We are rolling into 2025, and some of our forecasts as Value Line shifts their data array, so we'll talk about that a little bit. But we do have some future subjects, including Bitcoin that you heard tossed around here in the green room. We probably will do an investability of Bitcoin and blockchain type stuff at some point in the future, and so we will be covering these topics in Sassenage ahead. Any comments or thoughts, Ken?
No. How many entries did you get in the Groundhog this year, Mark?
I'm thinking it's about 140.
Oh my goodness, that's quite a bit larger than last year, then, isn't it?
Yeah, we had dwindled down a little bit to we had just under 100 last year, but this year we're charging full speed ahead again. A lot of people returning.
Hey, terrific, terrific. It'll be interesting to see how the things go. Then they should be up on the manifest site relatively soon, I think.
Yeah, they're all actually up, and people who have entered, most of you have your own individual dashboards, but we will be publicizing all of them here shortly, and we're going to look at those here in a few minutes as part of the program. All right, well, let's start today with just a nod to the Super Bowl. Tom Brady and the Tampa Bay Buccaneers did win. That is good for us as investors. When the NFL teams have won or the national conference teams have won, the stock market goes up more than when the American villains have won. We're 3 percentage points over the last 54 years, so we'll take that and hope for the best. It was quite an interesting game. I mean, I think that the game all revolved around the loss of a very key player for Kansas City, and I think many of the experts overlooked it. He was an offensive lineman. They don't usually get a lot of fanfare or credit. In fact, I'm not even sure they mentioned him during the game. That's how crazy this is. But he's one of their best players. He happens to be from this area. He went to Central Michigan University. His name is Eric Fisher, and he was hurt in the game previously, right near the end of the game. And what that did is it disrupted the fundamentals, the foundation of the Kansas City Chiefs offense, and Tampa Bay basically mauled them. And that's what it came down to. So, Ken, the Super Bowl indicator says that we should be out there investing regularly.
Well, if I would have known this, I would have watched the game and rooted for the Buccaneers then, Mark, you know?
And of course,
I have heard this indicator many times before as a Browns fan, and that meant that I didn't have to do much watching of anything for lots of years until this year. But as a Browns fan, I kind of kept an eye on what was going because they were originally from the AFL. As the league put itself together.
That's right. And then they were in the NFL, and then
they were also part of the original NFL, right? Uh-huh.
Yeah, they have quite a storied history. But of course, in Detroit and Cleveland, Ken, we don't generally have to pay much attention to the Super Bowl every year.
Right, you got it. You got it. I was, to be honest, I did watch the Browns come very close to playing the Chiefs evenly.
Yes.
3 weeks ago? I thought that it kind of all came down to a call that was a 50-50 call on a possible touchdown. So it was an interesting season for a Browns fan, to say the least.
Yep, it was a good time. So at Manifest Investing, those of you that hang out in the forum, you know that we have a lot of fun with Super Bowl commercials. And those are some of our favorites over the years. By far, one of my favorites is the Career Builder commercials with the monkeys in the conference room. But there are some absolute classics there. Do you have a favorite Super Bowl commercial of all time, Ken?
I love the gospel choir singing about "Made in Detroit," Mark. I just think that's the kind of music that I love to hear. And when they're singing it about automobiles and cars, and they're doing it in the depths of our depression, because while a lot of the country was in recession, we were in depression. While they were doing it during the depths, it certainly was a raised spirit, a way to make you feel good about where you were living and what you were doing.
Sort of like offering Mean Joe Green a Coke. How about you,
Yeah.
Kim? Any favorites over the years?
No, I just pick one at the very end.
Yeah, get $1 million or $2 million or $4 million a minute. Sometimes I watch just to see who is investing that type of an advertising budget. But there have been some good ones over the years, and if you want to relive some of those, the one at the upper top is Apple's Big Brother commercial from 1984. It ran one time, so the only place you can watch it is on the internet now, and you can have some fun with that one. One of the more famous commercials of all time. Checking in on the stock market continues to be red hot despite all kinds of uncertainty. In a recovery, which we're going to talk about here in a second, which is wildly in progress. The blue line is what we think matters. The green bars, I mean, that green bar is as high as it's been compared to the blue line in a long time. And what that means is that in general, it should be a little bit harder to find stocks in the buy zone. Is that a fair statement, Ken?
I think so, Mark. Mark, I was surprised watching CNBC within the last week to find two different analysts actually referring to the value line median appreciation potential, and they had to explain what it was and what it was measuring, but they were both using it the same way you're using it to show that while the appreciation potential is down kind of low, it's not abnormally low when you compare it to other parts in the last 10 or 15 years.
Yeah, it doesn't get a lot of attention. Mark Holbert has paid some attention to it over the years. And if you look at, in fact, that's a slide I should put together and bring it to a future session, the efficacy or the accuracy of the value line forecasts in aggregate over the years is actually quite strong, which aligns with our thinking too, because value line has a very similar discipline and process to the modern investment club movement. They just spend a lot more time with cash flow instead of earnings. But yeah, it's got quite a good track record over time with a few glitches along the way, but hey, there is no perfect crystal ball. We know that. All right. Well, speaking of imperfect crystal balls, Ken, let's tackle this one for just a minute. Because this one, I got to tell you, this one is really bothering me as a statistician / mathematician / engineer / wild-eyed investor. I don't know. What you're looking at here, and Ken's already heard this, so he's sitting there laughing. What you're looking at here is just 6 months ago. And the graphic is taking all of the industrial companies, in other words, the companies that are in the value line standard edition, setting aside the banks and insurance companies, and looking at the, companies who make things or provide services or et cetera, restaurants, all those other companies that are not banks and insurance companies, and looking at their average profitability going all the way back to 2004. And what we watched happen and what we talked about a lot last year was this whole notion that the wheels were coming off and that we were headed into this chasm. In fact, we did presentations on the chasm where this actually was back up here, and with the pandemic and COVID and everything else, the analysts were basically expecting these companies to practically go to the worst profitability in history. And you remember those days?
Well, yeah, I do remember those days, and I remember pushing back very gently and saying, I don't believe these numbers, and I didn't believe those numbers then. I thought that I used the pendulum idea, and I thought that the analysts who behave many times like a bunch of children that are rewarded and punished for different things and react in completely different ways than they should, I thought that they had just gone overboard to the negative side. And so I didn't like this graph, and I didn't believe this graph. And the next one you're going to show, I'm not sure whether I believe it either. So
yeah, I knew they were wrong, and I agree with you on the they go too far on the exuberance side, and they go way too far on the pessimism side. But I didn't expect them to be this wrong.
Yeah.
Because the numbers for 2020 are coming in, and they are not down here. They're up here. And, over the next month or so, those numbers will finalize with actual results. And again, keep in mind that the reason we watched that previous slide is this is what a recession looks like. So, you know, we were basically watching this potential recession unfold. And I don't know, you know, maybe I'm going to get out my tinfoil hat and start thinking in terms of conspiracy theories and all that type of stuff. And then Ken talks me out of wearing the tinfoil hat, and I appreciate that, Ken. But, you know, pendulums and all that other stuff, what this screams at me is I take a step back, and I'm not kidding. I almost have to put a bag on my head to slow down the hyperventilation. But as I take a step back and really think about, you know, the stuff we talked about in the chasm presentations, and our theme, which is equally valid, perhaps even more so here, is keep your head down, find excellent companies, buy them when they're on sale, rinse, repeat. And that's the only way you stay, dare I say, inoculated or vaccinated against this type of madness.
Yeah, the ones that I'm going to circle on this presentation, Mark, if I put this aside or put it in my pile of papers next to my computer that I look at on a fairly regular basis, is not the 2021. That one's going to become fixed pretty soon when the numbers are finalized. But I'm going to put a big circle around the 2022 and 2024 numbers and suggest to myself, or make a note to myself, that maybe here's that pendulum going the other way again now. You know, and that blue line is the trend, and we've watched plenty of great growth companies bob around the trend line for years. I'm not so sure the entire stock market doesn't follow that same kind of movement. The only thing that I think is that will alter my thinking a little bit is how much money the government and the Federal Reserve plan to put into the economy as stimulus, and you know, at what point do we stimulate ourselves to the point where all we can do is giggle? I don't know.
All right. Well, I guess it matters if we run out of tinfoil, we'll be in trouble. The one thing I will say about the magnitude of error and the drift, these numbers used to be up here. I mean, this 2024 number used to be up more closer to 14. So that has moderated over the last year, and I'm more comfortable with the numbers you're seeing on the chart there. It'll be interesting to see if they might actually get one right, or within a narrower range of variance. So, all right, I think I feel better now. It's just wild when you think about how far off those two are from that one to that one. And we're only talking about a few months, folks. All right. So let's have some fun with some fun stuff.
All it shows us, guys, is that their crystal ball isn't any better than ours.
Oh, it's even worse because they try to use it for short-term stuff, and they don't understand the long-term stuff. So that's a subject for another day. But Mark Hulbert and I talked for about 2 hours one day about that entire notion. But you're right, Kim. All right, so let's go ahead and celebrate some champions, and champions that put their head down and did pretty well. For those of you that are unaware, our Groundhog Challenge runs from Groundhog Day to Groundhog Day. There have been 14 of them completed. We are now beginning a brand new one. We're going to talk about that one in a few minutes. Our individual champion for this year is Andrew Spector from New York. He's actually the husband of an investment club member in a club in New York known as Alchemy. And that's a fun story all by itself. But Andrew just he knocked it out of the park, and he's back again this year. So we'll take a look at what's on his plate for this year. Relative newcomers out of Orange County. I think one of them may be with us. Marcia might be with us here today. Orange County knocked it out of the park also and won the group entry. So those are those two champions. And then we do keep track of some of our favorite rhinos, and Brown Capital Small Company, that's a mutual fund, actually took away the institutional honors this year. Just a quick reminder that we really do believe that the modern investment club movement works. And those are references to three of the major influences. on the modern investment club movement, Benjamin Graham, who said that stock prices matter and what companies are valued at matters, no matter what you read or see on the nightly news. David L. Babson, who basically said you can invest in growth companies. And he's famous for investing in a growth company like Abbott Labs back in the 1940s on the heels of the Great Depression. And George Nicholson, the grandfather of the modern investment club movement, who basically gave us a number of gifts, including patience and discipline. Ken, your thoughts?
Well, the quote's wonderful, Mark, and I'm tickled to hear us discussing on the television in the last couple of weeks whether or not a new generation of investors is going to prove that Graham and Dodd and Babson, that they had it wrong and that there's a different way to invest. I don't know if I'll live long enough to see the results of that challenge back and forth. I suspect, however, that some of these new ways to invest, which include taking a worthless stock and pushing it as high as you can push it because you're squeezing a bunch of shorts, I have a feeling that's not really an investment strategy so much as a way to play a game on a computer with real money. So I'm listening, but I still want to believe, and I still, for my portfolios, am going to believe that Graham, Babson, Nicholson, Dodd, and a half dozen other that we've talked about in the last 3 or 4 months on our bull sessions, that they're right, and that what you've been saying, Mark, put your head down, find some good stocks, and be investors. Don't be speculators, and don't look for the fast buck. I think that's the way to eventually put together a nice nest egg that you can live on in your golden years.
Well, Ken, I actually have another word for that thing you were just describing and we've talked about GameStop here the last couple of weeks, and I have a different word to describe what that opportunity for most people represents, and the word is tuition.
Tuition or student loans, right? One of the two.
Yeah, and nobody's paying this one back for me. I actually got in. I wanted to see what's going on, and in the interest of full disclosure, I tried to play around with a trailing stop limit order, and lost a little bit of money, a couple $100 or here and there. But I wanted to get in there and see what's going on, and it was fun. I mean, maybe we'll spend some time. I've been talking a lot with Sean Mace, who's on the call. We've had some fun, but there's tuition involved here, and it's an interesting situation. We might actually use it as a case study in the future. So let's talk about the opposite of that situation. People picking companies for the long term, because that's how people tend to behave in these contests. As we'll see here in a few minutes, some of them do go after some early stage opportunities, but that sort of thing. But here are the 2020 results. Our nation of groundhogs actually came in at nearly 50%, 49.7. That's versus a market at 24.4. And by the way, our favorite horde of rhinos came in at sub 20% for the year. Again, almost half of our picks outperform the market, and that's been kind of true for the last 14 years, about 49, 50% of the selections. So that's also a lesson to take away from this, in that, especially when you're engaging in a contest like this, you should expect and not be surprised when half of them don't work out. Because that numerically, and we're talking about, I believe, 6,000 selections over the 14 years and about a 50% hit rate. Your thoughts on that, Ken?
Well, again, it just demonstrates a different style of investing, Mark. And even though this is a contest, as I looked at those entries from 2020 that you sent me from last year and tried to pull out some interesting statistics, I was struck by the fact that there were an awful lot of people with really good returns. I mean, we were honoring the top 20 that had returns that were in the, up in the stratospheric regions of percentages. But there were an awful lot of folks with 50% return, 60% return, 70% return, and they were just picking normal, everyday, good, solid growth stocks that would have made any better investing member or any manifest investing member proud. They weren't going for the home run. They weren't looking for weird stuff or stuff that just came on the market or stuff that didn't have profit, and yet they were still turning in returns that were at the market, or, and you can see by this average, or at 50% on average. That's, I'm satisfied with 15%, Mark. When I put together a portfolio, if I can do that year in, year out, I'm not going to be greedy. I'll take that and live with it. You don't ever have to give me a prize for coming in first in the contest.
Well, I was sitting there, chugging along at 25, 30%, fat, dumb, and happy. And come to find out, I think I placed 59th, and that really kind of makes me happy. Here's the last.
When I enter these contests, Mark, I'm always crossing my fingers and whispering 1,000 times in the back of my brain, "Don't come in last! Don't come in last! Don't come in last!" Well, so that's my goal most of the time.
I have done that for some of the Mid-Michigan contests, and I don't like it when it happens. Here's a look at the past year, just as a reminder of how turbulent it was. The pandemic hit in the first quarter. It tanked stock prices, but the recovery has been, it's sudden historically. It's obviously been fairly steady over the last several months, but from a historic perspective, we're basically talking about 60, 70, even 80% recovery in a matter of less than a year. And that's massive. The other thing that we've been pointing out in these sessions for some time now, I want you to note that the small companies were lagging on Halloween, and they actually finished ahead. So that actually explains some of the small company stuff. Let's go ahead and keep percolating.
Mark,
yeah.
If you get that up there for just a second, I'm going to suggest an exercise for investment clubs to do in the next meeting or two, and that's to ask yourself, did we learn any lessons from March of 2020? Or if we didn't learn any lessons, why didn't we learn any lessons? And what could we put aside to think about and maybe do differently if we were faced with something that was equally as staggering as this period of time? I'll tell you the one lesson that our biggest investment club needed to learn was to be more decisive. We would hear stock watcher reports on a regular basis in our big investment club, and the stock watcher report would go something along the lines of, "This is a really good company, but it's not doing real well right now. Why don't we just gather our losses and wait until things start to turn around?" Well, maybe the discussion should have been, "This is a really good company. Why don't we take some of this extra cash that we have and put it into this really good company and wait till things turn around?" My big investment club, the big model club, kind of ran towards cash in the February, March, April period of this year, and then had a difficult time making decisions to try to get back in fast enough to capture a lot of this gain in the market. So I think a great discussion would be, even personally, what lessons did I learn, and how can I apply those lessons the next time the market takes a swoon in the opposite direction? And a swoon is like on the left of this graph, not like some of those bounces up and down on the right. Make sure you know you have a swoon before you take drastic actions also.
I'd agree 100%. I'm probably sitting in more cash than I should be through that entire summer period, and that's not unusual. It takes a lot of discipline to, again, put your head down, find an excellent company, and buy it. It's relatively on sale. All right, here's the rainbow. Just a reminder that we've been doing this for a few years. We've now topped the Wilshire 5000 in 9 of 14 years with the collective results. The 49.7 was the highest since 2009, which checked in at 55. But the comparison between that, notice that the 55 came in during a year when the general stock market went up 39. So this 49.7 compared to a 24.4% return on the general market is the highest relative return in the 14 years for the Groundhog. So everybody gets a Bill Murray inspired Groundhog Day standing ovation for that one. Since the inception now, we are up to a 16.1% return for all of the entrants in the market, in the contest, going back over those 14 years, versus 9.9 for the general stock market as measured by the Wilshire 5000. So any embellishment there, Ken?
No. Numbers speak for themselves.
All right, this is the slide from 2 years ago, and I wanted to put it there for just a couple of reminders. First of all, these are all great numbers, top to bottom, but notice how close together they are. There's 3 in the 60s, 3 in the 50s, a whole bunch of 30s. In a normal contest year, these slots are flopping around pretty regularly. We saw very little of that because of what you're going to see on the next slide. The other thing is the Knights of the Round Table were the champion institutional selection a year ago. We finished in last place amongst the institutional entries for this year. So we went from first to worst, Ken. So we just have to hope for better.
I've experienced doing that, Mark, so it doesn't bother me.
All right. And again, 2 years ago, the Bower City Ladies won for the third time out of Janesville, Wisconsin. So we celebrate them. We always talk about them. Curtis Sears was the winner last year. He took 21st place, I think, this year. We'll see in a second. So he's had 2 very strong years, and we'll talk about the number of people that have very, very good strong years. Sandy Castor has been in the contest for 3 years now, and she hasn't ever won it, so she's never had her name up in lights, but you're going to see how well she's done over the years. So I just put that there to remind us to think about Sandy Castor, who's going to be who is the all-time leader right now. Okay, so those numbers were all close together. These are not close together, and they are explosively good. These are the actual winners from this year's contest. From Andrew Spector, checking in at north of 200%. These are just the top 25. I can't fit all the people on the slide that beat the market this year because 78% of the participants beat the market. We usually put the market beaters on the slide. Well, these are just the top 25. And yeah, there's Curtis Sears at 22. He won 2 years ago, came in 22nd last year, so he's got a very strong 2-year track record. So we'll pay special attention to what's on his mind. But just some wonderful entries from top to bottom. Good stuff. The average return, again, pushing up on 50%. Any thoughts on any of those reach out and grab you other than those Wolves, a former champion out of mid-Michigan?
There's a lot of Michigan folk on this top 25. That's good to see.
Yeah, some good lessons to be learned in the area. And some people on this list pay a lot of attention to small companies. We like seeing that. Our dear friend from Pittsburgh, Nick, we'll talk about him in a minute, is on the list. But yeah, so a lot of good stuff going on there. And we just hope for a good, hotly contested year with strong results this year also. All right, just as a reminder, Andrew Spector's the winner this year, but there are the previous winners. And you can see we've had a couple repeat winners. Hugh McManus has won a couple of times. Anna Gombar has won a couple of times. But they pretty much span the country. We have our first winner from the Northeast this year. And going all the way back to Steve Parham and his dog Bo back in 2007 out of Knoxville, Tennessee. A lot of good, clean fun. By the way, I edged out one other guy in that 2008 contest. They say one of the rules is never win your own contest, and I took the lead on the last day of that contest in 2008. I'll leave it to you guys to figure out who I edged out by a nose. All right. Well, here's Andrew's entry from last year. It's just a complete rock'em sock'em robot. Am I showing my age if I talk about rock'em sock'em robots, Ken?
Yes, you are, Mark.
I remember rock'em sock'em. Well, these selections are like, wow. He selected 6 stocks. So that means $166,000 was invested into each of these 6. And Andrew just completely went ballistic wild, even without Livongo Health, which is LVGO, which became Teladoc, and threw off $100,000 in cash while they were at it. That's what you see here. That's how you add up to these type of numbers. But you even take that one away, and he's got Twilio and Roku here. It was fascinating to watch because even with 2 weeks to go in the contest, everybody else is trying to catch up. He actually gained like $750,000 in the last month. So wow, just kind of breathtaking. And he's back. We'll see what he picked for this year, just because people will probably want to make sure they at least have his selections on their radar screens, I would think.
And we need to figure out what is his selection process to go through to find these diamonds in the rough.
I do want to do a little bit more of that type of thing, and I think we will. All right. The group champions this year are the Orange County Model Club. Big hand, standing ovation to you guys out there. It's a group of investors that live in the shadow of Disneyland.
Mark, could I interrupt you, because Bruce has a question that's very germane right now, and he really would like us to answer it before the session ends. He wants to know if he picks a stock that Manifest doesn't cover, does the default go to cash for the entire year? Or how does that work on the dashboards if Manifest doesn't cover the stock?
It's a great question. We're going to cover that in excruciating detail here in a few minutes.
Great. Terrific. Thank you.
All right. So our group champions this year are the Orange County Club, again, out of California, shadow of Disneyland. But you can see over the years, it's been one of the more entertaining things for me, at least. Because it really is. It's a contest, but it is a way to share ideas. That group out of St. Louis and that group out of Janesville, 2 3-time winners, along with Herb Lemkool's Northern Traders out of Traverse City. I still think we need to have a session with all 3 of them in the cage in Chicago someday, Ken. Nice cage match potential there. So we'll watch this year's contest. Here's the winning entry from Orange County Model for last year. You can see they did select only 5 stocks, but they, much like Andrew, were focused in on some of these information technology stocks. The only disappointment for them was Goose. That's Goose, the clothing retailer. And they actually had quite a recovery in Goose. I think Goose was down in the low 20s in November. So that basically doubled over the last few months of the contest. But again, very diversified, right with 4 out of 5, and breathtaking results, historically speaking. All right. We'll just keep pressing on, Ken, unless you got anything else you want to kick at.
Yeah, I'll jump in if I need to, Mark.
Okay. All right, I'm going to finish out this slide. I couldn't remember who the winners have been over the years, so I'll finish this one out and share it in the future. But you can see that some of our favorite rhinos are on this list. Again, won by Brown Capital Small Company Mutual Fund. One of those other entries on there is going to be Rhino. At least one is going to be Brown Capital Small Company Mutual Fund. Let's talk about the long term now. We've been focusing in on the results from 2020. Let's talk long term. This is what we think of, near and dear to our hearts. Groundhogs that go back over the years. Some of the Knights of the Round Table involved here. You can see Ken's Wall Street Journal picture there on the upper right. That's Bo and Steve Parham. Paul Witt on the upper left. The 2 investment clubs that are shown there. This is the Bower City Ladies down here. This is the Broad Assets from St. Louis. This is Ann Manning. Ann Manning was one of the early winners in the contest. Andy Pagoric on the right has been a consistent leader. So has Hugh McManus. You guys all know some of these people. This is the Sirius Investment Club out of Pittsburgh. And just a moment of deep respect, honor, and gratitude. 2 of the gentlemen in that photo, Herb Barnett here, and Nick Strategos, passed away this year. And they have been powerful contributors, both of them, and all of the people in Pittsburgh. to the education efforts surrounding the modern investment club movement, Herb and Nick will be deeply and greatly missed. And I get a lump in my throat just thinking about it.
That little guy up in the upper left-hand corner, Mark, the
Yeah.
one in the striped shirt.
Yep.
He's going to be a junior at Purdue this year.
I can remember delivering General Electric stock to him that Paul had won in Pittsburgh on a trip to a investment conference out there. Interesting. Time does pass quite memorably, doesn't it? All right, so here's our chart for how we look at these Hall of Famers. And again, it's a matter of, what their relative returns. A relative return, again, is simply the amount in comparison to investing in the general stock market. So it's the amount that your actual returns beat the market by during the period where you're competing. Okay, so the number of years are down on the x-axis. The y-axis, again, is this concept of relative return or market outperformance, however you want to think about it. And today's standing ovation goes to Sandy Castor. Sandy hasn't won a contest in the last 3 years, but she has finished in the top 10 in each of the last 3 or 4 years. And she is now at a relative return of 30%. So Sandy's in the audience, I'm pretty sure, if I saw her name. So Sandy, we all salute you. And we'll obviously be paying attention to your picks this year. The other picks are right there. The ones in red, those are the Knights of the Round Table. We tell you that that's one of the reasons that they are there, sharing ideas as Knights of the Round Table. Some of the investment clubs that you've heard us talking about, there's a reason that we're fixated on the Arch in St. Louis and the broad assets. 9 years at almost 12%, beating the market over 9 years. That's rare, and it's wonderful. The Bower City Ladies over here, a little bit longer time frame, still exceptional returns. And the Sirius Club that we were just talking about out of Pittsburgh is right there. There's a number of Michigan clubs involved here. The Wolves and the Northern Traders are market beating. John Kimmel's group out of Kansas, and that group that Andrew Spector has been eavesdropping on, Alchemy, joins the list, and they are on the leaderboard. Just a whole lot of fun looking at some of these names. There's a lot of Michigan names on here, but there's names from across the country, Ken. All right. Any other questions or comments?
No, we're keeping up.
I do really enjoy seeing Ken Mobley. He's so enthusiastic. He's right there out of Harrisburg, Pennsylvania, doing extremely well. All right. Again, just to make the point, our experience has been that over half of the Groundhogs participating, again, all time, not just a flash in the pan for 1 year, beating the market on all those performance periods half of the time, and how it compares to some of the professionals out there. Some of the more reliable professionals or institutions that we track, Eddie Elfenbein, the Motley Fool, Value Lines Arithmetic Average, and Brown Small Company. All right, so let's go ahead and talk about some of the entries in this year's contest. Talk to the hand. Talk to the hand. All right, here's the current leaderboard. This is draft, and it is not corrected 100% for some of the stuff that was mentioned in Bruce's question. So we'll get to that. But Annette Benjamin is the husband of Andrew Spector. So we have another husband and wife combo here, Ken, that's disruptive. I mean, these two are related, and they're at the top of the leaderboard. If they stay there, we have another Anna and Rod Gombar moment. Rod is on the list, and Rod, you can take this and show it to Anna. Anna, our two-time champion, but Rod is out of the gate and ahead of his wife. She's not on the list this year. So from top to bottom, you can see some fairly interesting names on the list. Good, clean fun. Sean Mace is with us. We'll go to him in a minute if he still is with us. Joe O'Brien has been kind of frustrated in some years of the contest, but this year he went with amusement parks, cruise lines, and all the stuff that would recover and benefit from a recovery. And it'll be kind of fascinating to see how he does this year, because he is neck deep in entertainment and recreation. in his selections for this year. And Ken, you've got what, 14 vacations scheduled now?
Well, 11 actually scheduled right now. Yeah.
So 11. So you're out there doing what you can to support Joe's selections.
I'll tell you what's going to be really interesting, Mark, is to follow a couple of these entries that right now are sitting at combined par values of negative or of 1 or 2%, and see how they do over the whole year. I think that this might be a moment for us to do a little bit of testing if we keep this particular slide and compare par values as we go throughout the year.
Yeah.
I mean, the manifest says the orthodoxy is that we should pick par values that are like the top two in the contest, maybe even the top three in the contest.
Mm-hmm.
But we have a lot of people picking exactly opposite from that. So it'll be a really interesting year to watch some of these particular entries and see how they do.
Yeah, and in fact, in that same spirit and thinking, maybe we put together a slide which has the projected return on value, which are a little bit less sensitive. You're gonna see as we go through some of these entries here in a minute. There's quite a few early stage and emergent type companies. You see some of the PEs are really not real PEs at this point, and that's got something to do with what you're seeing in that distortion over there, Ken, too. So there are a number of things that we can watch pretty carefully. Here's another name that just keeps popping up. Gail Goldstein has 2 years of spectacular performance, and she's on the leaderboard already again this year, and should be eligible for that Hall of Fame here with the results of this contest. So yeah.
Speaking for the roundtable nights, we always start slowly, so we'll be moving up that board as the year progresses, I'm sure.
I didn't want to draw too much attention to it, but the Kavula family is actually ahead in the group entry with that investment club right now.
That's me and my grandson, so we'll see how that one does.
Okay, well, you got good stuff, and it's good to see Elk Rapids in here too, Ken.
Yep.
Local club. Good stuff. Some fresh new names and some wonderful ideas percolating from this group, and let's go ahead and get into that next. We will follow that kind of stuff. But let's start with the Arch people down in St. Louis, our all-time group leader, at least in terms of excess return or relative return. And you can see that they went with from my perspective, a little tamer list than usual for this year. A lot of household names on there. They've got a couple entries that we talked about briefly, and we're going to do that again and just kind of solidify it. One of the things that we have noticed over the years is they tend to have this launch pad type selection. And this year, I would submit, is it Kydell or Quidel? Kydell? I don't know how to pronounce that. But that's a rapid test company, obviously benefiting from the pandemic and days going forward. And we pointed out last week that this is a company going from single-digit earnings projected to get to $19 in earnings and then $36 in earnings before the analysts. Don't get me started on their accuracy 3 years out after what we went through just a few minutes ago. But this is a company launching. Here's a better look at it. Here's the actual visual analysis, and I think you see the launch pad type moment for this company. Again, they do rapid testing kits. So they are currently safe to say, in the eye of the storm. Any thoughts on that one, Ken?
Well, Kydell made one of my lists as possibilities for the Groundhog contest. So I'll be interested in watching how it does in this portfolio. It did not end up in my choices, but it did make my lists.
It came pretty close to making our small company list, but we were disturbed by the relative. If you look at, I'm not even sure you'd have to do a much deeper study to figure out if we should be looking at the growth over a longer time frame here. Value Line actually has them at about a 6.5% growth rate. Again, I have not studied the company in any depth, but what I would point out is that from November to now in February, between the two value line reports, notice that the forecast dates have changed down here at the bottom. They have upped their expectations for growth, for profitability, dropped the PE a little bit, but an interesting double-digit long-term return forecast, along with a decent above-average projected return on value. And notice that the low price forecast has gone from $295. That was based on a 2024 date, up to $480 on a 2025 date. So their fundamentals and their expectations have ramped up pretty dramatically. And it'll be interesting to see, what actually does happen out here. Does the need for rapid testing fall off, or is that something that's going to be in our futures for the foreseeable future? Kind of a TSA type quandary from my perspective. I mean, the TSA is still around at the airports. So rapid testing, whatever. All right, here's a look at Sandy Castor's entry. Again, she's our all-time leader, and went with some pretty interesting selections. C Limited, I'm pretty sure they're in logistics, transferring stuff from point A to point B. She went with a lot of the retail and internet-based content type stuff on the internet. Interesting selections from top to bottom. A lot of growth in her selections. And this actually will go to the question asked by Bruce. I'm going through right now and auditing all of the entries. In the case of snow, when you enter it in a manifest, you get kicked back this Intro West Resorts. That's actually an old abandoned ticker from either Google or Yahoo Finance. I'm not sure which. And I'm actually going in and adding Snowflake, which is the actual company, to the database. So within the next couple of days, when Sandy pulls up her dashboard, or any of you that want to, at that public link, that'll be populated with Snowflake data. And this company down here, it's an example. I'm just double checking with Sandy to see if that's the one she wanted to put in the contest. That's Xpeng, it's a Chinese company, and not covered. So for right now, the $200,000 that you see here is basically correcting for the value of these two that are uncovered. That'll be switched out and put into the actual values of the company as they're added to the database. And you'll see a couple other examples of that as we go forward. So I think that'll help with Bruce's question, Ken.
Well, Mark, I'm going to follow up on that just a little bit. If you end up with a company that's not covered, how will you handle it in the contest portfolio?
Well, actually, in the pizza and adult beverage consuming side of the house, known as our accounting department, they actually have the Y charts fueled database. Those companies are always basically tracked with real-time data, whether they're in our traditional coverage or not. I am going to try to cover every single one of the contest entries.
Okay.
So that's my expectation, is that we're going to be able to do that, and within the next couple of days. And you'll see.
And then go on, finish up, Mark.
Yeah, some of them are fairly creative, so it's going to require a little bit of gymnastics, but I'm pretty well through them already.
Okay, and then these prices, are these the opening prices on the third, or the closing prices on the second, or what are the prices that begins the contest, that the stock begins the contest with?
Yeah, the number of shares is based on the number of selections you made. In this case, $100,000 per selection, divided by the closing price on February 2nd.
So it's the closing prices on the second. Okay, all right.
And that's what the accounting department is watching, and those shares should reflect that number. Okay.
Okay. So all you folks out there, I run a contest also, Mark. So I also know that we have 8 or 10 people that are auditing every single number that you put on the chart. So
Yeah,
if you're trying to if you're trying to audit Mark, he's using the closing prices on the second, guys. Those of you that are writing to me and telling me that it's wrong, I can't change any of it. So write to Mark, okay?
yeah, I'm already getting provisional challenges for 10 months from now from some people. We'll cover that in a minute. All right, here's another fascinating entry. Barath has been with us a couple of years, has completely knocked it out of the park. When he becomes eligible for, and Ken, I know you watch him pretty closely, when he becomes eligible next year, he will be in that upper left-hand corner where you saw Sandy, no matter how he performs this year, because he's done so well the last 2 years. And those other three names that are there, Gail and Curtis and the cool kids, that's Herb Lemkool's bunch out of Traverse City. No matter how they perform this year, they're going to end up on that Hall of Fame list unless they have a complete catastrophe, and I can't even imagine that. So Barath has been had some very interesting selections over the years, and you can see his 6 selections for this year listed here. 4 of them are off our coverage, but Nautilus just fascinates me, and it's already one of the top performers so far in the contest. Farfetch, which I'd not heard of, I would encourage people to take a look at. But the next 4 in order, and then I have added all of them to coverage. Some of them are pretty small with very, very limited information. I think everybody here knows that when you have almost no information on these companies, just a couple of estimates or whatever, you have to treat that with caution. And so please do that. But CURI, that ticker is Curiosity Stream, which is a content provider for networks and TV networks and internet networks that just has wholesome content. An interesting study. The second one is Conversion Labs. That's a pharmaceutical retailer. Conversion Labs, CVLB, and a very early stage, very young company and young people running it. But it'll be interesting to dig in a little bit deeper. I just did a very cursory look at some of these companies. ONDS is, I believe it's pronounced Ondas. It's a technology company that delivers communication equipment and networking type stuff. Probably worth a closer look. Very early stage. Maybe it could be a very embryonic Cisco Systems, CSCO, that type of company. It'd be interesting to see as we watch these a little bit closer. And the last one of his unfollowed companies is Ozon Holdings, OZON. That happens to be the closest thing I could come to it, and after looking at it for 45 seconds, is that might be the Russian Mercado Libre. So that's another one that could be an interesting, thought process to dig in a little bit deeper and understand. Are you familiar with that company or any of those 4 companies at all, Ken?
No, none of them, Mark.
So Ozon, if you go to the Ozon website, it looks like Mercado Libre, only it's in Russian. So interesting selections. We'll see how Barath does this year. All right, this is the type of stuff I get, the abuse that I get. This is somebody sending in their Groundhog portfolio, and he wants bragging rights. It happens to be Sean Mace. Is he still on the line, Ken?
I don't know. I can find out for you.
Why don't you go ahead and check? Sean and I have been having a lot of discussions around GameStop, and you're going to be hearing more from Sean over the years. He is doing very well. He thought he would be in first place. I told him he was in 7th. I think it's 7th.
I don't have Sean on the list right now, no.
So he's probably gonna listen to this and then send me all kinds of notes. But Sean is in 7th place. He's very enthusiastic. He's been following the stuff that we do closely. Here is his bulletin board, or his dashboard for his entry stocks. Some fairly interesting names. Square, General Electric being on the list. Switch, which is his sweetheart company. And then last but not least, again, to make the point, Palantir Technologies is an information technology company specializing in CIA type security stuff, and does a lot of work for the government. So PLTR, it is now in the Value Line Standard Edition. It is in coverage. So the next time that you look at Sean's dashboard, that will be populated with the full scope of data from Palantir Technologies. So again, that $200,000 will go away and the actual value will replace it here. Okay. There's a look at the company. Again, fairly early stage. So Sean has everything from General Electric to Square to this type of company. Again, fairly limited information, but it's a compelling look. It's getting a lot of good press. It might be worth putting on the pile to understand what's going on. They have a whole bunch of cash, $2 billion in cash. They're not burning through it very rapidly, and they appear to be quite a player in this environment. So it just becomes a matter of understanding the business model. I don't think Value Line's right about that one.
Mark, Sean is back on now, so I'm going to unmute him. Sean, you're self-muted. You'll have to unmute. There we go.
Yep.
Hey,
Mark.
Your ears were burning, huh?
Oh, I was trying so hard to get in. I don't know what was going on, so I had to disconnect and reconnect.
Well, first of all, can you tell us a little bit about Palantir? Just give us the nutshell of what the.
So actually, Palantir is a company that actually just takes the raw data that you're interested in divvying up and trying to find that pattern. So they use a lot of AI technology. I actually found Palantir through through Reddit actually, but that's what got me into my sweetheart company, as you said, into Switch.
Okay.
But Palantir itself, though, will parse the data that you give them, and will try to find that pattern or try to find that one little bit of information that you're trying to get out of it. It makes the raw data that you give them readable.
Okay. Well, that's an area of immense potential. You know, we've been talking.
Oh, yeah, it's huge
for quite a while, but when people start to figure out really good implementation of big data, it's a whole new ballgame in many ways.
Well, I also want to add that with Palantir, it's also one of the part of the PayPal mafia that I'm sure Kim would absolutely love to look into.
Yeah, Kim didn't go away, but yeah, Kim would actually second that and note that yeah, this is the PayPal people doing other stuff. Good stuff. So Sean, you are in 7th or 8th place. Outstanding start. Good luck to you. Good luck to everybody. But good stuff. So we will populate that and press forward. Thank you, sir.
Great stuff. Thank you, Mark.
All right. Let's throw Saul Seinberg on the screen. Saul kind of rejoined the fray here in the last couple of years. He's got an outstanding track record in the contest. Saul is much more conservative. In fact, when I was talking to Saul the other day, he said, you know, those 80, 90, 150% returns, he's of the opinion, and he doesn't mean to be a doomsday or whatever you would call it.
Dismissive. He doesn't want to be dismissive of those companies, right?
Right. But by the same token, he doesn't want to be a party pooper, but he wouldn't be surprised to see the winner this year clock in with a 5 or 10% result. So he basically says, I'm gonna do some flashy stuff, gonna not do it quite so flashy, but also admit that you could probably pick a handful of really premium, good quality dividend stocks this year, and you might be just as likely to win it all. That's his opinion. It'll be interesting to see how that works out. Employers Holdings is a manifest roundtable selection, but you can see from top to bottom, his is a little bit more very high quality, decent growth, but not quite as flashy as some of those other dashboards that we'd put up there so far. And again, he's got let's go back and look. Saul is living on the Hall of Fame, not far from Sandy up in the upper left. So he's got quite a track record as an investor and an interesting source of ideas. All right, just a couple more to go through. In fact, this is our last one. Last year's champion, Andrew Spector. These are the 10 companies that he invested in this year for the Groundhog Challenge. And you can see that he's going after a continuation of some of the themes. There's also an opportunity to do a shameless promotion based on Stone Co. Ken, you may remember that was one of Pat Donnelly's selections at our panel for one of our online conferences. And Stoneco, STNE, that's a good study. Technology, restaurant related. Warren Buffett is a shareholder, and so is Pat Donnelly.
Interesting that I overlap, Andy, in three of my picks. That's really nice. Okay.
Oh, so you're definitely going for the coattails and trying to jump on that winning bandwagon, huh?
Well, no, I've gone with companies that I've known before and that I've studied before. I have NetEase and Universal Display both on my entries.
Yeah, those are solid companies. So it'll be interesting to see how Andrew does. He is on the leaderboard already. He's in the top 10 this year. All right. Just a quick reminder, you can go to YouTube, just search on Manifest Investing. We do archive all of these sessions, including the roundtables and any other educational sessions that we talk about, like you heard us formulating before the session. We'll probably do something on Bitcoin, Bitcoin-related investability discussion, and it'll end up here eventually. Subscribe if you like it to get automatic reminders, and let us know what you like. And just in closing, we have been featuring some of our favorite books for the Bullish Library. We don't need to cover them here tonight, but we'll just go ahead and leave it with, where's my Groundhog buddy? There he is. High five. Talk to the hand. We'll just go ahead and close things out, and we can leave the floor open for questions. But good luck out there, everybody, and let's hope for good, solid results. And I don't want to finish in last place. All right, Ken, I'm going to go ahead and shut down the recording, and then we can stick around if there's any stuff that people want to talk about. So thanks, everybody. See you again soon.